Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome our audience across Bloomberg Television, radio, as well as on YouTube. A day here, Carol, where 61 S&P 500 companies reporting. About half of those did it before the bell. The other half after the bell, including the granddaddy, the heavyweight, Apple.
Yeah, a lot of earnings coming down. And it's no negative sentiment as we head into these.
There's no Chinese tech stocks reporting after the bell.
I thought you were going to the metaverse. There's still time. It's still
trying to get rid of
him out of IRL.
All I'm going to say is it feels like very negative sentiment as we head into these earnings. And take a look at Amazon, Intel, Apple, Pinterest. They're all lower, in particular Amazon, Intel, and Apple, as we head into their earnings just moments away.
Yeah, what's interesting, though, is if you look at an index level, it's just a real choppy day with the S&P 500 moving between gains and losses, about 8 times today. So investors not really making up their mind.
Really interesting that a consistent narrative that we've actually now had for about 3 straight days is one of yields lower. We certainly don't want to opine too much and make a lot about 3 days, but it is sort of signaling a message with the 10-year back below 4% that maybe there is some starting to be priced in slower growth on the horizon.
We've seen decent volume as well today. We're higher 13% versus your average. On the S&P, we've seen decent volume in the NASDAQ, even though it's been to the downside in terms of where you're putting your money.
Yeah, interesting, the moves, too. I mean, looking at the Russell 2000 right now, basically unchanged on the day. It was up about a 1.5% here on the day. That was the strength. The Dow Jones Industrial Average holding on to some of its strength, with Caterpillar up 7%, McDonald's up about 3%, even something like Merck up 1% on the day. You add it all together, and as we get the closing bells, you get a Dow Jones Industrial Average higher by about 200 points, or 0.6%. S&P 500 in the opposite direction, going to close lower by about 5 to 0.6%. The NASDAQ Composite down by about 1.6% on the back of that huge slide that we're seeing in Meta Platforms, and the Russell 2000, as we just mentioned, up on the day, but only by about 0.1%.
Yeah, kind of an even split. A little bit more of a bullish tone when you look at the S&P 500, Taylor. 280 names gaining in today's session, 222 to the downside, 1 unchanged.
Take a look at where we are on some of the individual sector levels, sort of 2 dives underneath the surface. And indeed, well, it feels sort of like that industrial when you think about capital goods. Some of the dividend financials, of course, interesting given that yields are falling. And then, of course, all the way down to the bottom, Carol, it is exactly what you would expect. It's semiconductors, it's software and services, it's technology, hardware, and of course, it is media and entertainment. Those are the worst performers as we push forward and await Amazon.
All right, we are awaiting. I'm kind of glued to the terminal. In the meantime, Twitter, one of the standouts, was up about 0.8%. Remember that court order deadline. It is tomorrow, so the end beginning may be near. And now we've got Amazon coming across the Bloomberg, Romaine. Yeah, Amazon results coming across the wire right now. Interesting sort of setup here for the numbers. When we talk about what happened in 3Q, we're going to walk you through them right now. 3Q net sales coming in at $127 billion. That's pretty much in line with estimates, which were for 127.6 consensus. So I guess we can call that a match. Operating income at $2.5 billion. That's a big miss. The street was looking for $3.11 billion here. 3Q EPS at 28 cents. The street was looking for 22 cents. So a beat. Here's your forecast going forward. Fourth quarter net sales, $140 billion to $148 billion. That is the range that they're giving. The street, on average, was looking for $155 billion. So a miss on the guidance for 4Q net sales here. Something to keep an eye on. We're going to dig a little bit deeper into these numbers, guys. But right now, you're looking at a stock down 11%. That's the knee-jerk reaction here for a company that appears to be showing a little bit of a slowdown here in both revenue growth as well as some of their operating numbers.
And that story is so similar when you take a look at Intel. Now looking at fourth quarter adjusted revenue of $14 to $15 billion. Estimates on the street had been for $16.3 billion, and that flows through to a huge miss on the bottom line for the fourth quarter adjusted EPS of 20 cents a share. Estimates had been for 66 cents a share. They talk a lot about how they want to be driving efficiencies across their business. Their focus on embracing an internal foundry model, doing all of that while also aggressively addressing costs. So again, a full year revenue and a fourth quarter revenue that miss heavily on that guidance going forward.
Yeah, I want to go back to Amazon because we are seeing this obviously a big one. I'm looking at the press release. Andy Jassy, of course, the Amazon CEO, saying there's obviously a lot happening in the macroeconomic environment and will balance our investments to be more streamlined without compromising our key long-term strategic bets. I mean, Caroline, one of the big things is bringing down some of their costs.
I mean, the fact that they're also continuing to see international lackluster numbers in terms of a decrease in sales of some 5% coming from the international perspective. Is that an FX read across? The fact that we are still seeing some strength in 27% from AWS, but this is a company that, of course, has been having to streamline, and an Andy Jassy that says he's encouraged by steady progress, but having to lower the costs in stores fulfillment network as well. These are initiatives that they're going to have to bring to bear.
I think the AWS net, I mean, you mentioned the growth, 27%. That's great, right? But it is a miss, and it's a significant miss here by roughly about $1 billion of what the street was looking for when you talk about on the dollar basis. That was the strength of this company. So if that isn't there, that growth doesn't remain, it raises some other issues. I do just want to point out two other interesting numbers that jumped out at me, and you kind of touched on this. The 5% decline we saw in international net sales, which I think is significant, and the idea that when you take Amazon Web Services and you exclude the FX effect, you go from 27% to 39% here, but even that, I think maybe not quite what the street was expecting here, and you wonder sort of whether it is the 3Q numbers or the 4Q guidance that is causing what is now an 18% drop in the shares.
And do we need to talk about the free cash flow that is actually now an outflow of almost $20 billion for the trailing 12 months. They've had an inflow of $2.6 billion for the 12 months before that in the previous quarter. A similar story with Meta when our question was, what happened to free cash flow? You could also pose this question here to Amazon.
Shares continuing to move lower in the after hours. Amazon shares down 18.2%. That is the knee-jerk reaction. My question for Andy Jassy would be, point out specifically how you're going to decrease costs in this environment. What does that look like? How are you going to get costs lower? Because you know, his entire statement in the press release is about the cost structure.
All right. Well, we talk about the shares being down and the idea that when you had the big declines in Meta and some of the other companies earlier this week, it didn't have a huge impact on the market. We should point out that the NASDAQ 100 closed down by 1.9%. NASDAQ 100 futures here in the post-market down 3% here. So the Amazon effect negative here for the broader market. Poonam Goyal, senior U.S. retail analyst at Bloomberg Intelligence, joining us right now to walk us through this. Poonam, when you look at the market reaction here and you look at the data that we got out of this company today, is that in sync? Is this as bad as a knee-jerk reaction seems to make it look?
It's actually pretty bad across the board. It's hard to find something good in this press release. Sales were weak across the board. Guidance is weak. Margins are weak. I mean, overall, you know, the bright star here that used to be AWS is also weaker, both on sales and margin. So I think there's a lot to digest, but it's kind of humming the same tunes as other results that we've seen earlier, where the consumer is slowing, spending is slowing, and hence the results are much weaker than expected.
You know, Poonam, Andy Jassy, the CEO, saying we're also encouraged by the steady progress we're making on lowering costs in our stores fulfillment network. You talk about that operating margin, 2% versus 2.48% was expected. That's not good. I mean, that's how you make some money going forward. Where is the cost problem when it comes to Amazon?
Well, I think part of the miss that you saw in the operating margin was AWS-led. Keep in mind that AWS generates the bulk of Amazon's profit, and margins did come in 2 percentage points lower than were expected. So that's probably why the total margins are much lower than expected. Not to say that they haven't been making those cost-saving initiatives or that they're not tracking, but AWS is a big contributor to the miss there.
Poonam, I just want to go back to one thing here, and this is on the forecast that Amazon is giving. Net sales, 140 to 148 billion. But I'm looking at their operating income forecasts. The street was looking for 4.66 billion. They're providing a range of 0 to $4 billion. Now,
it's like
I'm less concerned about the fact that this actually misses the street estimates and a little bit more concerned here about how wide that range is. And I'm wondering, A, why they would provide such a wide range, and two, do you think that's going to be problematic here going forward?
Well, the wide range is probably a function of two things. One, fourth quarter, right? It's a big quarter, it's holiday quarter. We know there's a lot of inventory across retail and there will be promotions and markdowns. So we don't know where margins will really end up to be. It'll be a function of demand. And second, if AWS margins continue to tick down or are weaker like they were in 3Q, then that's also going to impact profitability.
Talk to us about the profitability that they are having to still hire, what they told the market, 150,000 people for open seasonal full-time, part-time roles. When we heard that number previously, we were like, oh, that's good. Amazon's still going to be hiring, still thinking it's going to be a big consumer holiday season. But is it when we get in that guide of a slowing consumer here? What are the reads?
Yeah, I mean, they have to hire, right? You're talking about a quarter where sales are going to be anywhere north of $65 to $70 billion. And that's a significant increase from the prior quarters or the earlier quarters in the year. So they need the infrastructure and also the support to fulfill these orders. So the holiday hiring is evident. Is it going to transfer into double-digit sales? Not likely. I mean, that's what the guide suggests. So we are concerned with the slowing consumer environment, and it's impacting Amazon too. Even though they had that second Prime Day, right, in the fourth quarter.
Which no one noticed.
Well, so Poonam, it raises the question about where investors should look to for cuts. I mean, this is a company that has sort of being lean in its DNA. I mean, Jeff Bezos in the early days prided himself on using old doors from Home Depot instead of buying actual desks because they were cheaper. Where can the company cut?
I think they just have to go back to their investments and really think critically about where the growth is and invest there. We saw them pull back on the project, regarding drone delivery. And there will be others like that they'll just have to pull back on temporarily or forever because it's not going anywhere anytime soon.
Sort of leads us to a big picture question, Poonam. This is an investor base that was patient while the company took a lot of the profitability from AWS, used it to subsidize the retail, the logistics, the sort of freight company that Amazon had become. How patient is this investor base going forward?
I think the investor base is losing patience. We see that in the market's reaction, right, for tech stocks where profitability is really in play and growth is slowing. You can see that at least this year. So it's about reigniting growth, reigniting profits. We still firmly believe that AWS can be more profitable longer term. So there is, hope that profits will get better. But on the retail side of the business, wages, distribution, fulfillment, these costs don't appear to be going down, and that's where its struggles will lie.
Poonam, we thank you so much for your immediate reaction. Not looking too good for Amazon. Poonam Goyal, senior US retail analyst for Bloomberg Intelligence. Even more expertise coming from our benches here at Bloomberg. It is one Amazon reporter. You know him, it's Spencer Soper. He's here in New York, and I'm interested as to what your read across is. What is Andy Jassy going to have to say to the market in these earnings calls? Oh, Spencer, unfortunately, we've just lost him on the phone. We will be looking more at Amazon in a moment, but let's dive into a stock that's actually performing rather well after hours. Pinterest. You knock it aside, but it is still bigger player than Twitter in terms of number of users. It is up 13% after hours. Is it a relief rally or is it actually something fundamental we're seeing in the numbers? Mandeep Singh's with us, of course, from Bloomberg Intelligence. And what do we have to like about the Pinterest numbers?
Well, the US DAU number was better than expected. Clearly, that is what drives a lot of their revenue, the US portion, and that was a sticking point over the last 3 quarters. So they seem to have improved sequentially. It was still a decline, but better than expected. And look, with a company like Pinterest, they've gone through a lot. Management change, they were underperforming. Expectations were really low. So what they have done here is executed better. And, with any consumer internet social media name, it's all about engagement and, making sure your core audience sticks to your social network, and that's what we are seeing in the print here.
Engagement and monetization. Is this a company that in this weaker macro environment has a better, maybe more engaged, maybe smaller, but a better way to monetize that user base?
Well, so they talk about visual search quite a bit, and Alphabet in their earnings called out visual search as an area of focus. So I can see, Alphabet being a competitor in the medium to long term. But look, when it comes to Pinterest, they clearly are trying to pivot more towards videos, something that Meta is trying to do through Reels. All the social networks are trying to catch up to TikTok. They're making investments. With you have to make sure that you are capturing your core audience. In the case of Pinterest, their daily active users is much smaller than a Meta or any of the other, and that's what they're showing in the results. They had an ARPU growth, whereas all the other social media platforms talked about pricing being a challenge in this quarter. So clearly, the pricing seems to be holding up better for Pinterest.
So, Mandeep, I do wonder with all the social media companies, as we try to figure out their way forward, we look at the, ad-based model. I mean, is there a clear vision in terms of sustainability for a company like Pinterest? Do we see that long term, they will be one of the survivors? Because it just feels like there's a mixed bag when it comes to players in this space.
Yes, and Carol, to your point, I think the larger networks have a better chance of surviving. The smaller ones, clearly, if you have Alphabet competing for visual search, even though they are not a social media kind of network compared to what Pinterest is, but people go to Pinterest for specific searches, specific type of ideas. If Alphabet tomorrow kind of enhances their Google search page to incorporate a lot of that, that will be a headwind. And in the case of Pinterest, it's just too small, So if Apple has made IDFA changes, that's going to hurt Pinterest because their ad targeting goes down. It's not reflected in this print, but still, the smaller you are, the harder the challenges are, and you can always have more competition from the like of TikTok or Alphabet for that matter.
All right, Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, taking a look there at Pinterest earnings, up 14% here on the day. The opposite is Amazon, down 19% here in after-hours trading. If that actually materializes into tomorrow's numbers, it's going to be the biggest one-day decline that we've seen on Amazon going back to 2006. Amazon reporter Spencer Soper joining us right now to talk a little bit more about these numbers. 15% growth on revenue in the most recent quarter. They expect growth in the fourth quarter, Spencer, but not as much as the street was expecting.
Yeah, big mismatch, especially the forecast for the fourth quarter. The sales are coming in light. The guide on income is coming in light, and so just a big signal that the holiday quarter is going to be a lot more painful than investors expected it would be.
So lay out for us the challenge that Andy Jassy, Spencer, has ahead for him as he continues to try to essentially bring Amazon back, after he's been CEO for, a year now?
Yeah, so he's going to have to show that he can be disciplined, that he can cut expenses to get in line with the slowdown in revenues, and that's the big challenge. Is Amazon's been so used to being able to pretty much spend its way, and the market's been very forgiving. That those days are coming to an end, and they're going to be looking for more discipline. He might have some harder decisions to make. Right now, he's cut some experimental programs and imposed a hiring freeze, but Amazon might have to go deeper than that.
To that end, I mean, Amazon has always served us such strong sort of growth trajectory that we started to delve into what about advertising businesses? What about new fires of energy coming for Amazon? And at the moment, we haven't even brought up whether the advertising area is showing growth. Are you likely to see a doubling down on the content side on that sort of area, or is that where we could see a little bit of a pullback?
Yeah, definitely. Technology and content is kind of bundled together, and that's where a lot of these experimental projects are, as well as all of the video programming. That's a big bucket that they could drain from. And then on the advertising side, that did come in decent, and I think that they'll fare better than, say, like Facebook and Google in the digital ad market, just because if consumers are pulling back, advertisers want to be as close to customers as they can when they're in a shopping mindset, and that's really what differentiates Amazon from some of their competitors for digital advertising dollars.
Hey, we just want to remind everybody, we're talking about Amazon out with their earnings after the closing bell. Stock down about 19% here in the aftermarket. The big red sticky, as we like to say at Bloomberg, fourth quarter net sales, a big miss. 140 to 148 is what they are putting out there. The estimate on the street is 155.52 billion. We're talking with our Spencer Soper of Bloomberg News, knows this company inside and out. So, Spencer, when you look at this, how much of what we're hearing from Amazon is a result of a sign of the times and what it tells us about the economic environment and the outlook? How much is it, though, is very company specific?
I mean, it's a little of both. I think there was expectation that this was an opportunity for Amazon to stand out if consumers are pulling back and looking for deals and value, as well as convenience, that they would be putting their spending on Amazon. But this is a signal from Amazon that in this environment that they're not expecting people to spend as much with them as investors thought. So I think you can read two things into that, both on the consumer side maybe being a little bit weaker, and on Amazon's side not winning as much market share in this environment.
Spencer, we've long talked about this company that was investing heavily in same-day, two-day shipping, an investor base that was eagerly waiting the payoff from those investments. Do you see that payoff coming anytime soon?
That's a great question, and the Amazon philosophy has always been keep investing in faster delivery, faster delivery, faster delivery, because the feeling was someone is willing to wait 2 days for some things, only a day for other things, wants something same day, and that if they can get as much inventory as they can in that same day delivery window, that they just keep peeling more and more sales away from stores. But it's very expensive, and so in this environment, it's going to be very difficult for them to continue that sort of investment cycle if they're not showing results from it.
Really appreciate it. Our Amazon reporter, Spencer Soper, joining us, of course, here from our very own headquarters. Caroline, we think about recapping Amazon as well. And, we just want to revisit Intel as well, because this is a stock that's been trying to bounce around. We've thought a lot about the impacts of the chip environment. And again, it was a fourth quarter adjusted revenue, $14 to $15 billion. Estimates.
I'm just going to move in. Maybe we've got a technical issue with the microphone over there. Unfortunately, Taylor will get us sorted out. But let's have a quick look at the breakdown on Intel. Shares rising after hours. We're looking ahead to Apple earnings as well in just, 10 minutes' time. Crawford Delpret is with us, International Data Corp president. First and foremost, dissect the Intel numbers, a relief after what, the CEO himself, Pat Gelsinger, had said is going to be the worst of it, the third quarter.
Yeah, great to talk to you, Caroline. Yeah, I mean, I think that there is some relief around Intel. I think there's been so much bad news around the PC sector. When you look at the IT sector, we started this year expecting IT demand somewhere between 5% and 6%. We're now hovering in around 3.5%. And the majority of the takedown that we've seen in revenue growth has been in the PC sector and in the phone sector. And so, Intel has been on the front lines, if you will, of the weakening of demand. And I think that so much of the bad news has been out there and has been getting out there, and people have kind of braced themselves for it. So I think that is what you're seeing is some relief.
Crawford, help me understand, though. They're talking about fiscal year adjusted revenue, 63 to 64 billion. It has seen 65 to 68. They're also talking about cost reductions to 8 to 10 billion annualized by the end of 2025. If they're reining in costs, I thought we were talking about expansion, like, Intel spending to be, more of a significant player going forward, where they've lost share to a lot of other players. So help me square that.
Yeah, Carol, it's a great question. So, we pulled in during this pandemic 18 months, 2 years of demand. And I think people got super excited about the category. And now what we're seeing is we're resetting, right? And so in the third quarter, we saw the PC market come down 15%. In the fourth quarter, we'll likely see the market come down 20% in units. And for the year, we'll see the market down about 15% in aggregate. So I think we're seeing a massive reset on the part of the market. Of course, Intel being the largest player in that market. Now, having said that, yeah, there's a lot of mixed messages coming out of Intel right now, in the sense that they want to invest. They must invest for the future to be relevant in more markets and to be more competitive in more markets, and frankly, to bring some of that production back onshore here. But at the same time, their costs are too high. And so they've got to reduce costs. And so what are you going to see? You're likely going to see sales get hit hard. You're going to see marketing get hit hard. And you'll see areas around core engineering probably hit fairly hard. So as they retrench.
All right, we're in conversation right now with Crawford Del Pret over at IDC, International Data Corp. He's sticking with us as we walk you through some of the earnings we've already got out of Intel and push ahead to pending earnings here on Apple. But we do want to bring you some breaking news. This is on Twitter and that deal by Elon Musk to buy the company. There's been a lot of great reporting out of Ed Ludlow saying that this deal has effectively been closed. And now we're learning that the MSCI Global has actually already announced that they are removing Twitter from the indices starting effective basically on November 1st, which is next Tuesday. This seems to be the first actual public confirmation by anyone that basically this deal is a done deal. Twitter no longer going to be a public company, guys.
Yeah, this is after being, a publicly held company for 9 years, so a very significant change. And you think about, man, this saga has been going on since early April, right? And, when he took that passive, but more than 9% position, didn't want to be part of the board, and then it just started to unravel from there.
At the moment, we're seeing Twitter just ever so slightly continuing to be up on after hours, but only up about 0.2%. So not the euphoria in the market that we're likely to see, and of course, all eyes on that key decision-making process that comes tomorrow. Crawford, just back to you for a moment as we're dissecting what's happening on Twitter and as and when it gets taken out of being a public company. We're at $53.81 after hours. Talk to us about what's happening as you push us forward to Apple. We have but 7 minutes to go until the big daddy of them all starts to report. Are we anticipating some sort of signs of continued growth, consumer resilience, and people wanting to be buying? Is Crawford there?
The iPhone goes and vice versa. So we're expecting that we will likely see somewhere around negative, a drop of about 8% for iPhone shipments. So, before I get to the other categories, let's unpack that for a minute. I think that when you have inflation as high as we've had inflation around the world, and you have consumer budgets that are a finite amount of money people can spend, the money has got to go somewhere. And when it's going to $6 gasoline, or when it's going to food that's escalating in prices, I think that the decision a lot of people make is, maybe we can go another 6 months, another year before we upgrade our phone. And so we're seeing that. And I think we expect to see that in those iPhone shipments.
Hey, Crawford, Apple is, when we talk Apple, China is an incredibly important market to this company. We can't ignore everything that's been happening in China over the last few months, and most recently what we got in terms of President Xi just solidifying his power there. From a production standpoint and from a sales standpoint, what commentary are you looking for from Tim Cook and others about their position in China?
Yeah, hey, hi, Tim. So I think what you want to really understand is how open is that market going to continue to be to Apple? How receptive are they going to be? There are some players in China, who want to be who are super competitive, like Huawei, and I think that we're definitely going to be looking for comments around the runway, I think, for lack of a better term, that Apple can have in China for products, sold locally. It is an absolute desired brand. It has been an aspirational brand in China. And I think that those are the comments that we're looking for around access and continued access to that, what is an incredibly premium product in China.
Talk to us about some of the privacy issues, the changes that Apple has made, some of the big ripple effects that we've seen with Snap, with Meta, you name it. How are you thinking about if a lot of those impacts are behind us or still yet to come?
Yeah, Taylor, I don't think that they are behind us. I think that you're going to see services continue to be the second most important and increasingly most important category for Apple. And we're expecting that they will be able to show in the range of double-digit growth for that category. And I think Apple's going to do everything they can to try to protect their services and protect their ecosystem in order to make services grow for two reasons. One, it's the second largest category that the company's got. Number two, it is sticky. Services are super sticky. And we have seen services continue to be sticky and continue to be resilient. And Apple knows that. And the extent that they can put on a defensive posture to companies that maybe want to come in, as well as push their services forward, that's a great business decision for them.
All right, Crawford, really appreciate you taking time to be with us ahead of International Data Corp, helping us push ahead to those Apple earnings, which should cross the wire in just a few minutes. Before we get to that, we do want to go back to Twitter. Bloomberg's Ed Ludlow has been all over this story for the last few days, really the last few months, and it looks like this 7-8-month saga has finally come to an end. We're starting to get more and more confirmation, Ed, that this deal for Elon Musk to buy Twitter is done.
Yeah, redhead crossing the Bloomberg terminal that Twitter will be removed from MSCI global indexes. This is largely mechanics, right? If you think about the context of this deal, sources have told us the paperwork's done. Many of the equity co-investors have handed over the funds to the Musk team. We know that the debt part of this deal has been placed into escrow by the banks. But the deal cannot be completed until the public equity shareholders of note receive compensation for their shares, right? And that's the mechanics of the deal. NYSE has had a notice on its website all day long that shares will be suspended, or trading will be suspended from the NYSE pending market open Friday. So look, all the signs are we're moving in the right direction. It's an issue of mechanics. Everyone's very excited. Romaine, I know you're very excited, but let's just wait for the official announcement.
Well, this is all about saving humanity, Ed. So who wouldn't be excited?
According to that note this morning, it is.
Sure.
I mean,
I don't even know what to say.
To be fair, Ed, I mean, Elon doesn't have a choice, right? I mean, he's contractually bound to do this at this point.
Well, hold on a minute. I don't want to cause confusion in the market. That's the last thing I want to do. But until we have a confirmation by 5 p.m. Eastern time on Friday, the direction of the Delaware Chancery Court is that that's a deadline. If the deal is not completed and a formal announcement's not made by 5 p.m. Eastern time on Friday, the position of the court is we're heading to trial in Delaware in November. Everyone was very excited about going to Delaware. That's why I say, let's wait for it.
Really?
Ed was excited about
what
going
kind
to
of company
Delaware.
do you keep?
Ed wants
He
to
had his
visit every
hotel
state.
booked. He had looked at what restaurants he wanted to go to. And
Tax-free shopping out there.
Good beaches.
But Ed, overall, like, are there any still question marks left to be solved here? Are there any questions as to what money has to be coming from where? Any more pressure on Tesla's share price? Or is it all baked in now?
Yeah, I think a lot of the market was watching for a regulatory filing to hit at 10 p.m. Eastern last night, because if Musk had sold Tesla shares Monday, the deadline to disclose them was 10 p.m. Eastern time last night. That did not happen. There's still a nervousness about it, the need to sell additional Tesla stock to fund this deal. I've spoken to new equity co-investors who came on board this week, have this paperwork signed and have transferred their funds. So maybe Musk brought people in at the last minute. I really think the big questions, Mark, we move on, right? What does Twitter look like going forward? What is its name? What are the material changes that Musk makes to the underlying technology that powers the platform? And as we reported last night, according to sources, Musk told employees in that San Francisco office that he's not laying off 75% of the workforce. He didn't give a number. He didn't deny that, generally speaking, layoffs are coming, but he said that 75% number, he didn't know where it came from. So there's still a lot of question marks about the health of the business, where he takes it, but that open letter he posted on Twitter this morning to advertisers suggests in the near term the ad model stays.
All right.
Ed Ludlow, really appreciate it. Joining us, of course, there from the SF office. And we think about you guys just recapping as we count down just a few more seconds until we get Apple. Just the digestion of big tech really under pressure in the after hours market. Romaine, Amazon, of course, leading
I just want to mention Amazon one more time before we get to Apple, because I mean, a 20% drop in this company is rare. We've only really had it a couple of times back in 2006 and 2001.
When its market cap was much less important.
Much less here, but the percentage drop significant. I believe Apple shares now crossing the wire here. Interesting results, guys. Take it away.
We have fourth quarter iPhone revenue, $42.6 billion, right on line with estimates, $42.67 billion. Fourth quarter iPad revenue, $7.17 billion, well below estimates of $7.8 billion from the street. Service revenue a little bit here in line, $19.19 billion. Estimates were for $19.97, so a little bit of a miss. Overall, let me just break these numbers down. Fourth quarter overall revenue looks good, $90.1 billion. Estimates were for $88.6 billion. All the way down to the bottom line, a little bit of an improvement, $129 versus estimates of $126. Greater China revenue maybe not as bad as we think, only $15.5 billion. Estimates had been for $15.65 billion. And then, of course, we break it down. The Mac products look good, Carol, and wearables as well look very strong.
Well, and how often do we talk about the infrastructure, the network, the closed network that Apple has created that just forces you to buy more products? And we've got a headline from Apple saying their active installed base of devices reaching an all-time high. That has been such power and leverage for them, Caroline.
Let's go into the earnings statement. Tim Cook talking about the quarter's results reflecting Apple's commitment to our customers' pursuit of innovation. But the CFO, Luca Maestri, talking about a record September results, continuing to demonstrate our ability to execute effectively in spite of a challenging and volatile macroeconomic backdrop. They are seeing that, but continuing to show strength of their ecosystem, unmatched customer loyalty they talk about, and of course revenue growing over $28 billion and operating cash flow up $18 billion versus last year. This sounds like a optimistic and pretty buoyant CFO here.
Yeah, it certainly does. And look, that installed base going to a record is certainly obviously important because the more people who have these devices, the more people Apple can sell services to, an incredibly important sector. More comments from CEO Tim Cook. He says, as we head into the holiday season with our most powerful lineup ever, we are leading with our values in every action we take and every decision we make. I want to read this part really closely. He says, we're deeply committed to protecting the environment, to securing user privacy and strengthening accessibility. The user privacy, a big one there, because if we think about the changes that Apple made with IDFA, that is what has led to declines in the online advertising stalwarts, including Google and Meta platforms.
Well, right now, the market reaction is decidedly negative, down 5%. Big part of the reason why you're seeing NASDAQ futures now down 4% here. That's even after sort of the big drop that we had going on in Amazon. But when you look at the miss that we're seeing on services, a modest miss, $19.2 billion versus basically a $20 billion look that the street was looking for, as well as a slight miss when it comes to that iPhone revenue at $42.63 billion versus $42.67. I wonder if that's one of the reasons why you're seeing the negative reaction here. And of course, we should remind people we don't actually get any real guidance until that conference call, so nothing really to hang your hat on there either.
Just a couple of paragraphs in the press release. At least we can hang our hat on some comments that we're going to be getting from Daniel Flax, Neuberger Berman, Senior Research Analyst. Great to have you. Thank you for your time. We're sort of breaking down these numbers, and then we're also getting numbers about the strength of the operating cash flow. They're still looking at $24 billion in operating cash flow, and cash flow that's still up $18 billion versus last year. Is that enough to offset some of the small misses that we're seeing within the top numbers?
Good afternoon. Great to be with you. I think what we're seeing is that Apple is continuing to navigate what is, of course, a very challenging environment. And the results demonstrate that really this broadening of the revenue drivers, the continued growth of the installed base, execution on product cycles across the phone, across wearables, the watch, Ultra, which is their new one, iPad, all of that the company is doing well on. I think as we saw with Amazon results, and I think what people will worry about in the very near term is of course, some of the cyclical headwinds. But if Apple is able to continue to pull everything together, hardware, software, and services, and do it in a fun, secure, and private way, I think the company will be successful through this period and, more importantly, coming out of it.
All right. So, Daniel, let me ask you. I mean, here we see shares of Apple. They're down in the aftermarket, down about 3.5%. Does that make sense to you? And would you be a buyer then in terms of some of the losses here? Is that a buying opportunity?
I like Apple stock here. I would be a buyer at current levels. And I think it's going, the success of this company is going to continue to be driven by their ability to delight users and really empower people. If we think about what's going on here beyond just the quarter and of course, the challenging environment, Apple is a story of empowering developers. The company's paid out over $260 billion to developers since they opened the App Store more than a decade ago. So even though services is a little weaker than expected, the App Store, we recall, has of course been very, very strong throughout the pandemic. Some of that is slowing as people re-engage in the physical world. But the drivers in services, among other areas, things like Fitness Plus, the drivers, I think, are healthy. And so if we think about what Apple will look like through the next several months and as we look into the back half of next year and into 2024, I think there will be solid growth.
And from all places in the world, the fact that we're getting slightly light number from Greater China in terms of revenue, 15.47 billion, the estimate had been for 15.65. How much are they dependent on global growth or global slowdown here?
China is an important market for Apple. Clearly, there is a dynamic with the compares in China and other parts of the and other geographies, and they will lap that. Currency, as we know, is also a headwind that will be ultimately transitory, but that does impact the numbers. I think specifically to China, the key is that Apple is able to delight Chinese users, continue to attract Chinese developers, and execute on its business in the country from a production standpoint as well.
How big of a risk is that, Daniel? We continue to see President Xi's commitment to COVID zero, and we see Apple, at least in a very small way, moving some production to other countries, including India, which they've been doing for years to develop some iPhones there. But how big of a risk is what's happening in China to Apple's overall business?
I think it's a factor, and certainly the COVID lockdowns have impaired demand and has also impaired production of the devices. But China, as I think about the next 5 to 10 years, will remain very, very important to Apple. But if you think about the products themselves, a lot of the components, the intellectual property, is coming from many countries. It might be assembled in the end in China, but it has a lot of pieces from elsewhere. You mentioned India, they're expanding there, they're expanding in other markets, but I still expect China to remain very, very important to Apple over the next several years.
What's the growth story, the longer term growth story here, Daniel, for Apple? It's iPhones, to a smaller extent Macs and the iPads. It's a great ecosystem, but as we've seen with other companies of this size and more importantly of this maturity, there always comes that inflection point where if they don't come up with something new, someone else will.
I think if we look back and think about the iPod, what they were able to do, they were able to reinvent the listening experience. And there was, of course, the device, iTunes, the ability to procure a music track for 99 cents. And then, of course, the iPhone, the iPad. And as we look out over the next several years, I think you're going to see more and more growth in wearables. I think that opportunity is just getting going. I think over the next few years, you could see Apple enter the augmented reality market. The key there as well will be to define a user experience that's differentiated. We've talked about services, and in a lot of ways, even though the business is now getting quite big, Apple has a lot of things I think they can still do. So, for example, they're doing more in the health and fitness realms, and I think there could be services they add there. So I see a lot of opportunity there. The key remains investing aggressively, innovating, and executing on their product cycles.
All right, we're going to leave it there. Hey, Daniel, thank you so much. Daniel Flax over at Neuberger Berman joining us there with the latest on Apple. And folks, I'm just looking at the stocks in the after hours. Let's just recap for everybody. We've got Apple down about 1% in the after hours. We've got Intel up about 4%, Amazon down about 19%, Pinterest up 11%. I mean, mixed bag, but these are some big names, especially when you think about Amazon, that sell-off that we're seeing, Taylor, is pretty dramatic.
And the lack of sell-off, you could argue, within Apple. And, you know, Romaine, for me, it comes down to use of cash. The ability of this company to churn in massive free cash flow. Their priority and their goal to be cash neutral in terms of all the cash that they get. They, you know, pay down some of the debt and engage in share buybacks. And that just highlights the health of this company.
Absolutely. A financially stable company, as it has been for quite some time. And obviously, we just heard him talking about this idea of sort of that ecosystem and how powerful it is. But there is a long-term growth story. And Tim, I thought your point was very salient here about that China risk. And not just the idea that, okay, maybe they need to diversify, but is there risk of retaliation, risk of Apple really being caught in the middle of whatever's going on right now between Xi and the rest of the world? All
right, just an indication, NASDAQ E-mini futures, they're down more than 3% in the after hours. So we're going to see, certainly, Tim, how all of this plays out tomorrow. That is a wrap. Our cross-platform coverage, so many earnings. We'll see you tomorrow.